One. And welcome everybody to another Smart Money Circle update. I'm Adam Sarhan. With me today is Jason Shapiro with crowdedmarketreport.com. He's also a market wizard and a very, very smart person. So Jason, I'm very excited to have you on the show. Welcome.
Thanks for having me.
So Jason, I always like to begin. Can you tell us about your story and how you got to where you are today, please?
30 years of trading, basically 33 years of trading is what got me here. I started trading when I was a 22-year-old kid, when I was working in a bank in Hong Kong and just kind of bored with my job, and started trading Hang Seng Index futures, and a lot of lessons over the years, a lot of gains, a lot of losses, and a lot of lessons, and just started working in the industry at some prop firms and then some hedge funds, and then started my own firm, and that's kind of where we are now.
Nice. I love that. Are you passionate about markets, or is it something a labor of love, or is it just, hey, I make a lot of money doing it and I want to do it? There we go. I wanted to laugh. That was the intention.
Yeah. Am I passionate about markets? At this point, it's really it's my job. I mean, obviously I have a passion for it because I've been doing it for a very long time and have stuck with it. So I guess you could call it I'm passionate about it. It's what I do with a very large percentage of my time during the day. So I guess you could call it passionate. Yeah. But I try to be more robotic than passionate at this point. So
Love that. So can you tell us about your investment strategy, please?
So I am a what I would call a fader of mass consensus, which ends up kind of being a turn picking strategy. When people are massively lined up on one side of a trade, I am looking to go the other way. And like I say, a lot of times it ends up being sort of picking the turns in markets, picking kind of medium to longer term capitulation turns in markets. And
Interesting.
that's what I do.
Are you more of an infrequent trader, or are you more of an active trader?
I'm pretty infrequent.
Infrequent. So you're waiting for the fat pitch, so to speak, and then when you see it, you'll put it on.
That's it.
Got it. And then I know you use the COT, or the Commitment of Traders report, which comes out and it tells you where institutions or money managers are positioned, more or less. My question comes with actual price, technical analysis, fundamental analysis. Is it just the COT report, or do you incorporate other things into the investment strategy as well?
So basically the trades that I make show a large bias to one side in the COT report first, and that is not enough for me to put a trade on. The COT report is not perfect by any means, but it does show when people are all lined up to one side. Now, a lot of different things happen after that, but then I look for what I call a market confirmation before I will do something. So if I'm seeing people are massively short and I'm looking to get long, I'm waiting for the market to kind of give me a confirmation before I do that. And by confirmation, I like to call it like a news failure event. So here's a market that everybody's short. Here's why they've been getting short. Let's say because inflation is too high or something like that. You get a piece of data that confirms that information. So you get a much higher CPI report, and then the market doesn't go down on that. So
Right.
that to me is the market confirming the fact. And why isn't it going down on that? In my view, it's because everybody's already short. So if everybody's already short, then I don't know where the marginal seller is.
Gotcha. So basically what you're looking to do is you have a thesis, you're waiting for the market to confirm it. Let's say in October with that CPI report, which was the bottom, that in the stock market in October of 2022, the CPI report came out, stocks did not go down. Instead, they went up. The market's looking to the right of the chart or in the future, but that CPI report by definition is looking backwards. Is that a good way of wording it?
I think that's exactly right. And that's a good example that was the exact low in the stocks, at least up until now. When that CPI, and back then, CPI was just the thing, right? And that was a really bearish CPI report, and the market sort of gapped down and then finished up on the day. And that's where I try to get long.
I love that. So how do you handle risk?
So I do it mostly on an individual trade basis. So I trade 37 different markets, but let's pick that one. If I'm getting long the S&P on that, I'm looking at the low of that day. And I'm looking at my entry, and I'm risking, for me, 70 basis points on each trade. And the reason for that 70 basis points on each trade is that really brings my return stream to about a 7 or 8 vol on an annualized basis, which is what I'm targeting.
Okay, excellent. So what are some mistakes you see people make with respect to risk management?
I think it's endless.
That's so true.
And risk management is really the vast majority of what this game is. So I think that's where people get in trouble. But what are the mistakes they make in risk management? I mean, they put stops in that are somewhat irrelevant, like people say, oh, I trade with stops. Okay, well, I trade with a 1 point stop on the S&P. Okay, well, then you're going to be stopped.
Question.
Uh, they don't honor their stops, they don't even think about risk management a lot of times, they think that they're going to be right, and therefore, they add to losing trades, all these kind of things are what people do that kill them. And it's hard because I find that 80% of my stops, I wish I didn't take, I get stopped and then the market goes back into what would have been my favor. But you have to realize that the other 20% are why I'm still in business.
Yeah, no question. So what do you do in that situation where you get stopped out and the market goes your direction? In other words, it comes down, stops you out if you're long, and then it goes up.
I don't know. I call my mommy.
Do you get back in? In other words, do you have a mechanism to get back? You just leave it, let
I
it
mean,
go.
again, if the market still is showing people are crowded, and
Yeah.
then I wait for another news failure event
Okay.
to get back in,
Interesting. So you only trade days when there's news for that specific market, not based on technical, like a new high getting broken or something along those lines?
I don't do any of that technical analysis stuff now.
Got it. Okay, wonderful. So it's commitment to traders and then seeing how the market reacts to the news when the news comes out.
That's
Love
it.
it. I love that. I love that simplicity. That's genius. Okay. What are some timeless lessons you've learned along the way that you'd like to share with the audience?
You're not smarter than the market, you know. I always say you may actually be the single smartest person in the market. And if you were, that'd be great. But that's not enough, because you have to be smarter than the entire market put together, which is how many millions of people. And you are not smarter than all of those people put together, right? The price in the market is the culmination of everybody's thought process in the world, basically. And you are not smarter than the entire world put together. So, like, you can sit here and say, look, I know that the economy is this and that, and I know that this and that, and this doesn't mean anything for the markets. I mean, just look at this year as the perfect example. If you were smart and you were looking at the economy and you were looking at all this stuff, you would be short the stock market. And that has not worked very well up to this point in this year. I saw an interview one time with Warren Buffett. This is kind of funny because he did an interview with Maria Bartiromo. This is probably 15, 20 years ago on CNBC. And she gave like a little piece of it during the day. And the piece of it was, she said to him, what do you think the biggest mistakes people make in the market are? And he said, I think when people try to correlate short term, meaning 6 months to a year economic activity to the market, that's the biggest mistake they make.
Wow.
And then she was like, okay, more of my interviews on my show tonight or whatever. And then they went on to a section called Bulls and Bears. And they had a bull and a bear sitting there. And she didn't, but the person turned to the people and said, so what do you think about the market? And the guy goes, well, I think the economy for the next 6 months is blah, blah, blah. I'm like, Warren Buffett just told you that that's the biggest mistake people make, man. And you just said that, right? So I think that's really, I agree with it. I think that trying to figure out all this stuff, these fundamentals, and they do it all the time when they interview people. What do you think about the market? And their answer has to do with the economy. Well, I didn't ask you what you thought about the economy. I asked you what you thought about the market, right? And people think one is the other. And I personally do not think that one is the other, other than very long time frames. I mean, if the US economy is not going to grow for 20 years, then the stock market probably is not going to go up, right? And you can clearly correlate the fact that the stock market has gone up for however many hundreds of years with the fact that the US economy has grown for those hundreds of years. But for the next quarter, the next 6 months, the next year, I think that's the biggest mistake people make.
Love that. So let's talk about the trading for a second and square that a little bit with the look having a longer term outlook, because trading by definition, especially with stops, it's more of a shorter term outlook with your each trade or with the holding period. How do you square that with the looking long term with the Buffett style?
Well, I think it fits in together. It fits in together, if you want to be a long-term investor, okay, on both sides, whether you're getting in or out, then okay, look at long-term trend. If you trend in the economy, which you probably cannot do, but if you could, then be a long-term investor, week or month or 3 months, based on what you think the economy is going to do over the next year, right? That's the mistake. Those things don't correlate. So that's what I would say about that.
So what you're saying is basically determine which hat you want to wear, a short-term trader or a long-term investor, and then align yourself accordingly.
Yes,
Yeah,
that's right.
like
And if you're going to be a long-term investor, truthfully, and you're going to be bearish, it hasn't worked very well up to this point.
good luck.
Yeah, and maybe this is the point that it works. Maybe the US economy is about to crack and the dollar is about to become irrelevant and this whole society is about to break down. And I can argue that I think that those things are probably true. But it hasn't happened to this point. And I've been hearing so many of these things since I was in high school about how the Middle East is about to blow up and about how, the guy from North Korea is going to drop nuclear bombs and about this and that, and human beings have a way of persevering and moving forward. So,
No, I love that. So let's go back to when you started trading in Hong Kong. What advice would you go back and give your 30-year-old self?
Don't think that you're smarter than the market, focus on risk management, focus on reading the tape, letting the market tell you what it's doing rather than you trying to tell the market what it should do.
Yeah.
I think those are the most important things. The money that I lost early in my career was all kind of based on that stuff. And also, don't trade when there's no trade, trading, especially when you're young, it's like, oh, this very exciting thing. And every day you trade and you make money and you talk to your friends about how exciting it is. But the truth is, if you do that, then you're over trading. So I think trade less and let the market tell you what to trade rather than you tell the market what it should be doing.
I love that. Let's dive a little bit deeper into that, reading the tape and helping remove your biases from the equation. Can you give us an example of that? How it works from a practical standpoint?
So one example was back in, I forget if it was 98 area kind of thing. I think it was 98. And I was trying to be Mr. Contrarian and the stock market was going up. And I was trying to short it and it just kept going up and I was shorting it and it kept going up and I was shorting it. And Alan Greenspan came out at one point and said something about irrational exuberance. Yeah. Which was a famous line. And the market gapped down that morning and finished the day up on the day. And the whole morning I'm like, hey, I'm a genius. It's me and Alan Greenspan are the only two people in the world that understand what's going on here, right? And by the end of the day, the market closed up. So to me, that's tape reading, right? When it didn't go down on that day, well, then maybe being short was not the right place to be, I was also shorting, I remember late 2000, also trying to be contrarian, late 1999, the second half of 1999, when we know that everybody was talking about how much money they were making in the internet stocks and AOL and all this pets.com and all this stuff. And it was like the classic shoe shine boy giving stock picking advice. Yep. So I'm shorting it. But you know what? The second half of 99, the Nasdaq went up another 50%.
That's
right?
crazy.
So it's this patience thing. You have to wait until the market can confirm that. You're not going to get in the way of it. Let it run. There are times when the masses do make money, right? Over time, they won't. But there are periods of time when they do, which they have to, otherwise they would not ever be involved, right?
But yeah,
so it gives, and then it takes away. And we only need to go back to recently, the post-COVID thing, when, a whole bunch of people got involved in the market, and it was simple as can be. It went up all the time, and hey, you bought momentum stocks, or you bought breakouts, or you bought whatever the hell you wanted. It didn't matter.
Right.
And then if it went against you for a day or two, it didn't matter. You just held on because they all came back, right? And people were making money until it stopped, and they have lost more money than they made since then. And truth, the S&P is only down like whatever, 12 or whatever it is, 12, 13% since the highs. But those Momo stocks and all that, they all dropped, 70, 80, 90%. So I think that's the point. You have to be extremely patient, right? And it's a very hard thing to do. Everybody wants to be involved. Everybody wants to make money right now. And, I've had people say that to me. They've kind of joined my, my webpage and sent me messages, hey, my kid's going to college. I need to make $100,000 right now. I'm like,
Yeah.
well, I can't help you, man.
Yeah,
What I mean? I wish I could help you. I wish I could tell you how to do that, but I can't. All I can tell you is how to use risk management and how to use discipline and how to use, different things like that to earn positive returns over time. I'm not a magician that's going to sit here and tell you, oh, here's how you're going to make a, here's how you're going to turn 10 grand into $100,000 in the next 6 months.
Yeah.
I wish I could.
Yeah, go back to Buffett's line about the next 6 months don't even matter.
No, that's right. So, and that's the other point is this whole thing is about over time. There's going to be periods where you don't make money. Nobody makes money every month, every week, every day, every quarter, or even every year. I would say like George Soros, if you look at George Soros, he's been pretty damn good at the markets, right?
Yep.
If you look at his track record, there would have been a period where he got fired because he had,
no question.
He had a period where he lost like whatever, 25% or like that. There's no hedge fund or anything like clients that accept the 25% drawdown, So you just have to accept that there are losing, and it's very hard to accept. I'm down this month. It's only the 8th of the month, and I'm sitting here all weekend, pissed off as can be. And that's after I had one of my best starts to the year that I've had in like 15 years. But it doesn't matter. I'm down on this month after 1 week, and I'm pissed, So it's very hard. It's very hard to understand that discipline, but it's fact. Now you have to be able to somehow decipher between I'm just having a losing period here and, well, what I do actually doesn't work over time, right? And obviously it's very important to decipher that, right? And if you don't have the time, the history, then it's hard to know if that's true. And that's kind of the difficult part of the game. But, what is your edge? Does it make sense, right? You have to have an edge. And this all has to be, for me, I believe, about a process. You have to have a process. It's not, I wake up in the morning, I look at a bunch of stocks, and I'm just going to punt a bunch of shit, right? That's not a process, and that's not going to make you money. This is a very difficult game. And if you think that this is going to be easy, you're going to learn that it is not. This is probably the hardest thing there is to do, right? Other than, I don't want to disrespect people that do things like, are firemen and all that, that's probably harder, that are putting their physical lives on the line, right? But in terms of trying to make money, this is a very, very difficult, trying to get out of being born like in the ghetto and trying to get out of that is probably harder, and I have a hell of a lot of respect for the people that are able to do that. But I'm just saying this is a very, very difficult thing to do. And if you think that it's not, and you think you're just going to play it and you're going to have fun, you're not going to make money doing it. And maybe that's not what you're trying to do. Maybe you're looking to break up boredom and you're looking to have a hobby and you're looking for a little bit of excitement, and that's fine too, right?
Yeah.
But I always say I have a few hobbies and not one of them makes me money. They all cost me money, and I'm willing to do that. I play guitar. Okay, I buy a new guitar. Okay, it cost me a couple $1,000s. I'm not making any money off of that. I buy a new amp. I pay for a teacher. You know what I mean? But I'm willing to pay for that because it's a hobby that I enjoy, right? If you're going to treat this like a hobby, that's what it's going to look like. This has to be a very disciplined game.
So powerful. Even Buffett, his stock was cut in half, like down 50%, I think 3 or 4 times in the last 50 years, and he never sold a share. He's mentioned that before. So your point about all these guys have these drawdowns and it's not investable and so on and so forth, that is such a powerful point. And the mental side of it too, Jason. I've been doing this since the 90s. And I wrote a book, it's called Psychological Analysis, and it was #1 on Amazon for 2 months because I wanted to address all of these points that you're bringing up, because it's such a mentally taxing business that most people don't even talk about it. They just pull out their calculator and say, okay, if I buy 1,000 shares of Apple and it goes up, it doubles, I'm going to get rich and make the 100 grand for my kids, whatever. So, it's so powerful. Let me ask you a question about drawdowns, since we all have drawdowns, anyone that's going to be in the business for a long time. How do you handle drawdowns, both from a practical standpoint, i.e. reducing trade or reducing risk or trading less, and then from a mental standpoint?
From a practical standpoint, it is what it is. Okay. My trades are the same, right? I believe that my process over time works, so I stick to it, right? Now, if my drawdown starts to get larger than expected, then I start to think about what's going on here, right? That hasn't happened for 20 years, so fortunately, I haven't had to worry about it that much. Maybe it's coming, I don't know. I was just actually speaking to somebody last night about that, was that because he's asking me about my process, and what about if you did this, and what about if you added this, and what about if you added that? I said, I do what I do, and it's giving me the return stream that I expect and that my clients hire me to produce. So I'm not making changes. You can make changes, look into these things that you're talking about and improve upon what I'm doing. I think that would be fantastic, right? And if my drawdown and my return stream started to fall outside of expectations, then maybe I would do that. But truthfully, I wouldn't, because
Right.
I'm too freaking old at this point. I would just retire. Okay, what I doesn't work anymore.
Right.
Okay,
See, like, yeah,
I'm going into retirement, right?
yeah,
But
yeah.
somebody else, should by all means look into all these different things. I'm like, I wish I could help you, but I do what I do. I keep it very simple, and it does, as long as it's doing what I need it to do, I'm not changing it, right? So, as far as the mental part of drawdowns, I'm still not the best of that. I had a horrible weekend this past weekend with my wife, because I was in a bad mood.
Yeah.
And I don't like to tell her, well, why are you in such a bad mood? Oh, because I lost money last week. I don't like to go there with her, because it shouldn't be like that. But as much as I like to say, oh, it's just part of the process, and and I know all that, it still affects me. I mean, I'm not a freaking robot. I like to think I'm a robot when it comes to trading, but I'm not. I get into a bad mood when I'm losing money. It just is what it is. I'm much better at tempering my good mood when I'm making money. That's another horrible thing about trading, right? The bad days are so much worse than the good days are good, right? It's pain. This whole thing is pain.
Is pain, and that is such a powerful statement. This whole thing is pain, because even if you're up, let's say 10%, you want to be up 20, or the market's up 12, you're up 10, or whatever the case, you're never really happy. And then when you're down, it's pain as well. So learning how to take those W's or take those wins, to me, is really powerful. Okay, that's wonderful. From a just curious, from a trading standpoint, you said you're not really frequent. How many trades do you put on a year? Is it 2 or 3? Is it 10 or 20? Or is it 50 to 100? What is your estimate
Between
there?
20 and 40 per year.
20 and 40. Okay, great. And then
Maybe more, between 30 and 50 a year, I would say.
gotcha. Okay. And then your expected drawdowns, is it do you backtest your system? Is it systematic, or is this more discretionary?
It has been back tested. A lot of the stuff has been back tested. But I now have, just trading this process, I have going on 21 years of doing
Wow.
the same thing. So I've got 21 years of data that I can go off of. That's the actual trading.
Love it.
Beta testing, while it can have some good things about it, also has a lot of bad things about it. So at this point, I can go by my actual returns and see what my expectations are.
Yeah, I had an allocator tell me one time, he says, he goes, Adam, I've never seen a bad back test.
No, that's exactly right.
Yeah.
Exactly right.
It was
And
spot on.
it's funny with allocators too. There's nobody, I always say this to people that are trying to raise money from these allocators. And you gotta understand, man, there's nobody going to an allocator going, look how shitty my returns are, give me money.
Seriously.
Right?
Seriously.
Everybody going there has a great return. So how
No
is he gonna
question.
pick, how are they going to pick you over somebody else? And really what it comes down to is, in my view, does he trust you? That's, and the only way someone's going to trust you is be honest. Right? I
Yeah.
don't know any other way to get somebody to trust you other than don't lie. Right? And that may not get them to trust you either, but at least everything you've said is the truth. So there's no reason for them not to trust you. So, but yeah, it's like you say, there's never been a bad back test.
So let's talk about overcoming some of that pain, Jason. Most people get knocked out of the business. You know that most people underperform. They don't beat the market. Most people don't even stick around for decades like you have. So you obviously have the ability to understand there's pain in this business or in this arena. How do you handle that pain, and how do you make sure that you control it and it doesn't control you, outside of obviously getting pissed off every once in a while, but big picture wise, like what's your relationship with that?
Drugs and alcohol? No, I'm kidding. I don't even drink alcohol. The drug
Me
part,
neither.
we'll talk about the drug part, but yeah, I do drink. But I mean, what can you do? Meditation obviously helps a lot. That's a very important thing, right? I wake up every morning and try very hard to spend time meditating. And I also try to do it in the evening, but I don't always get that done. But it's certainly every morning, the first thing I do when I wake up is I meditate. You have to breathe, you have to keep things in perspective, right? Other than that, you have to try and keep an even keel. Like I said, I'm much better at keeping an even keel when I'm making money than I am when I'm losing money, but you have to try, otherwise your emotions get involved. 95% of this game is up here. The picking of assets that are either going to go up or down, as difficult as that is actually the easiest part of this game, right? It's this part that's so very, very, very difficult. And that's why process is so important. I get through it. At the end of the day, I get through it all. As much as I might sit here all weekend and moan and cry and go and sleep all weekend because I can't deal with it. The truth is I get through it because I have a process and I'm going to follow my process. And I believe that process is going to work. And if I end up wrong, and the process stops working, it has worked up till now, but if it stops working, well, then I'm either going to have to change my process or I'm going to have to say, I got to figure out something else to do.
Yeah, no, I love that. So let's talk about the meditation for a second with your morning routine. Can you elaborate a little bit or give people some advice on how to meditate? Because I think that is so incredibly powerful and underrated. Is it a gratitude meditation, or not specifically what you do? If you don't want to share that, that's fine. But what framework would you give the audience to set up a morning routine that helps them win?
I believe that meditation is about clearing your mind, right? Which is pretty much impossible to do. You can't get your mind to be completely empty because there's always something going on. But that's the goal of what meditation is for me, right? Is to just clear your mind, right? The way that I have learned to do it, for example, is I'll sit somewhere outside usually, and I will focus on, since I can't get my mind to be zero, I'll focus on one thing. Let's say a sound of, I don't know, a bird. And that will be the one thing in my mind. Like I say, since I can't get it to zero, at least maybe I can try to get it to one thing. So I will just sit there and focus on one sound for as long as I possibly can and try to get all these other thoughts out of my mind by focusing. Now, some people do it with breathing. You can just focus on your breath.
Yeah.
That's why they do that, right? Because they're trying to get everything else out of your mind. So you can just focus on your breath. Listen to your breathing. Feel your breathing, and then that's all you are feeling, is you just focused on that. So whether the market's going to go up or down, whether your wife is mad at you, whether your kids are going to fail out of school, whether whatever it is that's bothering you, your car is broken, whatever, that, at least for that time period, is going away. And it's very hard to focus on one thing, and it takes time. I've been meditating for probably going on 30 years now. And I still get lost, right? But if you could start with 5 minutes a day of that and slowly get it up, if you could meditate for even 20 minutes in a sit down every day, I can promise you your life will change.
Question. I fully agree. And one of the other common threads I've had on this show is lots of other traders and hedge fund managers and very successful people do that. Ray Dalio does it. Howard Stern meditates. Jerry Seinfeld meditates, and countless other traders that have been on my show as well have meditated as well. It really is a superpower because it's all, like you said, it's all about the mind and it's a muscle, and you either control it or it controls you. So why not learn how to control it? Because that's 99% of it or 95% of it. I love that. So yeah, that thank you for that. That's really, really powerful. Any other tricks of the trade that you do to help stay focused on the process and not get lost in style drift or the next shiny object that shows up, or throughout the day, keep yourself from over trading or you know, doing stupid things, for lack of a better word?
That part has become very easy for me
Okay.
because because I believe in my process, but also I manage money for institutions. Okay. And the reason that they have given me money is because I told them what my process was, right? And for me, like, I'm not a trend follower and I'm not a macro, discretionary macro person. I am this turn picker.
Mhm.
And therefore, because and I'm fading mass positioning. So therefore, by definition, my returns are going to have negative correlation to just about everything. And that's why they have hired me, right? And I used to say I don't raise money anymore, but when I would say, listen, don't hire me because of my returns. Okay. Clearly, no one's going to give you money if you're losing money, but I'm like, hire me because of my correlation. I can't sit here and promise you anything, first of all, because it's illegal, but
Right.
I'm definitely not going to sit here and promise you that my returns are going to be this or that. But I can come pretty close to promising you that my correlations are going to stay very steady, right? So hire me for that as a portfolio. You have a portfolio of return streams, and mine will be the least correlated to everything that you have in there. And if you understand why that increases your risk adjusted returns over time, then give me money, right? Because I will do that, right? So that is why they've hired me. So therefore, that's what my job is. As much as I don't get paid unless I make money. So at least as much as I got to be like, oh, I got to make money, or else I'm not going to get paid, right? My job is to create this non-correlated return stream. And to do that, all I have to do is follow my process.
Got it. Yeah, that's
So
so powerful.
that helps me to not do other kind of stupid trades. And it's not to say once in a while
Yeah, of course.
I don't break the laws, the rules, but it's only a very special situation where I will do that. You're talking about 1 or 2 times maybe in a year. And if I do it, it will be done on like 1/5 the size of any kind of something else.
Love that. So let's shift gears a little bit, Jason, and talk about crowdedmarketreport.com. Can you speak about how you started that and what it is and all that fun stuff?
So I was in this Market Wizards book that Jack Schwager put together a couple of years ago. And after I was in that, a whole bunch of people started to hit me up on LinkedIn and places like that, asking me if I could help them learn how to trade and all that. And on the one hand, you get to a certain age and a certain part of your career where you realize that giving and helping people is important. People had helped me when I was younger, and that becomes an important thing to do. But at the same time, I was like, I can't sit here and help 200 people at the same time because I have a job and I have a family and I have, it would just be impossible to mentor 200 people at the same time. So I kept telling that to people, look, I'd love to help you, but I can't help everybody, And one of those people said to me, well, why don't I start a web page and you can centralize that and everybody could kind of come on there and you could do it that way. And I said, look, if you want to do that, that sounds good. Go ahead. I have a newsletter that I've always written up for myself. I mean, just to keep me about here's the week coming up, this to keep me sort of disciplined. This is what I'm looking to do based on what I do. And at one point, I was distributing that to people when I worked at a larger hedge fund. I was distributing it to the PMs there. And for a while, I ran a CTA, and a few of my clients were sort of very high net worth hedge fund managers themselves. And so I was distributing it to them. And they all sort of liked it very much. So I said to the guy, look, if you want to start this webpage, we can distribute my newsletter on there, which will help people. And that was really the idea. That was what I was going to do and see, whatever, that sounded good. And then he started like a whole Discord page on there, which I didn't even know what a Discord page was, quite frankly, at that time. But so people get this newsletter and then they get on the Discord page, and a lot of the newsletter, it's not, and I tell people, The newsletter is not buy S&Ps, sell S&Ps, buy this, buy, you know, I do show people what trades I'm making based on my process. Okay. But that's not what it's there for, right? Because you're not me, so you shouldn't trade my process. You should trade your process and hopefully use these things to enhance your process, is what I tell them to do, right? But then we get on the Discord and we talk about all these things and questions and different stuff, and it's become very interesting because we've really attracted a very kind of interesting group of people on there. You know, I think that to trade the way I do and to think the way that I do about markets and other things takes sort of a very sort of independent type of thinking mind. And so we have actually attracted a whole bunch of independent thinkers. So it's become really cool for me, the whole Discord thing, talking to these guys, because, you know, first of all, I work out of my house. I work alone. I don't have any employees. I don't have any of that, right? I did that before and I hated it.
Me too. Yeah.
So
I
now
get it.
I work for myself, right?
I get it. Yeah.
You know, that can be somewhat of a lonely thing, right? And when you're so contrarian and you're so different, it can be somewhat of a, now the market kind of takes care of that, because you can be contrarian, everybody's against you. If you're making money in the market, well, who cares, right? It proved
Exactly.
the point, right?
It's the reward. Yeah.
Right. But having said that, it's nice to have sort of other people to talk to and to that think, you know, and it's nice to have people that think differently too, but are open-minded enough to, you know how it is in the world these days, right? You know,
100%.
nobody can talk to each other if they disagree, right? Whereas I feel we have created a place where you can put your thoughts out there. Just because they don't agree with Jason Shapiro, the market wizard, you know what I mean, doesn't mean that they're wrong. You know, Jason Shapiro is wrong all the time too, right? Unfortunately, you know, Jason Shapiro is just as human as everybody else, right? So it's great because it's created a place, and we now have a whole bunch of eyeballs that are looking at these things as well. You know, what's a news failure? Did the market fail on good news today or bad news? What was the news and why was there a fail? And we have a whole bunch of eyeballs and therefore a whole bunch of thought processes as to whether or not this was that kind of thing. So it's been interesting, and it's been a really cool thing in my life for the last couple of years.
Oh, I love it. And let's talk about one final question for you. We talk about meditation from a practice. The other practice, which I found myself doing early on, and you do as well, is journaling, but in a newsletter form. So we journal about the market, because I do a weekly process as well. And I'm curious a little bit, can you speak to do you find that as a journal, or do you have a separate journal as well? What are your thoughts there?
I don't do a journal anymore
Mm-hmm.
because in a way, you're right. My newsletter is my journal. I'm so on my process at this point that, like I say, if I break my process, it's maybe twice a year, and it's an amount of money that is not even relevant, right? Like I might do it just based on, here's a guy I know that's wrong all the freaking time, and he's pounding the table. And while my process is not totally set up for this, I might just fade him just for the hell of it, right?
I hear you.
But I did journal, and I did a very good job that early in my trading career because of people told me that that's what I should do. And that is how I developed my process. Was the last time I blew out, I was like, okay, I've had enough of this, you know? And it wasn't just like I blew out, you know, I made a bunch of money and blew it all out, made a bunch of money, blew it all out, made a bunch of money, blew it all out. And I said, I've had enough of this. How am I going to do this? And I was able to go through my journals and say, what are the trades that are actually making money over time? Not just one time,
Right.
out of sheer luck, right? But over time. And what are the ones that are not, right? And I'm going to obviously eliminate the ones that are not and try to focus solely on the ones that are, right? And that all came really from journaling and
Yeah.
from keeping good records of what I was doing. So I think that is an important thing for people to do. Yes, you know, P&L tells the real story at the end of the day, right? Or is what you're doing working or not? It's very simple to answer that. Where's my P&L? But there are certain things that work and certain things that don't, and you want to know that. So I think journaling is very important for that.
Well, Jason, thank you so much. This has been absolutely fantastic. Hopefully, we'll have you on again at some point in the future. People can find you on crowdedmarketreport.com. Is that correct?
That's correct.
Any final thoughts before we say goodbye?
That's really it. I appreciate you having me. I'm gonna get
Beautiful.
your book. Is that book still available on Amazon?
Yeah, it's on Amazon. It's called Psychological Analysis, and it was the first half is really basic, fundamental technicals, but the second half of the book is where I dive into cognitive biases. You ever do something and hit a wall? We all have, right? I call them mental walls, and I show people what they are and how to break them down, and there's a whole bunch of other stuff as well.
That sounds great. I'm gonna check that out.
Beautiful. Thank you so much, Jason. Speak to you
All right,
soon.
thank you.